Welcome everyone to Vested Interest. This is Shane back for another Stock Pick of the Day video. It is Wednesday, March 5th. We're going to take a look at Enterprise Product Partners. This is a limited partnership company here, so a little bit different than a regular stock. We'll talk about that a little bit more, but it is out of the energy sector. Now, before we get too far in the video, if you could do me a big favor, it only takes a couple of seconds, but it really does help a small YouTube channel like mine grow. It helps with the YouTube algorithm to spread the videos a little further. Hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that subscribe button down below. Don't forget and make sure it is clicked. Hit the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday whenever the market's open. We take a look at a company stock that's pulled back on the day, run it through the screener, and see if it makes it onto my watch list. We'll see that screener here in a second. There's the thanks button down below for anyone who might want to buy me a cup of tea. I really do appreciate all the subscribers and viewers of the channel. The channel continues to grow because of people like you. And please share the videos with anyone you think that might find value in the content as well. That's one more way to spread the videos a little bit further. All right, this is the Vested Interest Stock Screener. This is how we will be running through the video here. We'll run it through the screener. We'll see how it stacks up at the end and see if it makes it onto my watch list. And just because it makes it onto my watch list does not mean that I am buying. It just means I'm interested in doing more of a deep dive into the financials. I am long Enterprise Product Partners. So for this type of review, it's actually a way for me to back check the company and see if maybe I need to start looking at the financials a little bit more, or keep an eye on it, or have some concerns maybe if it doesn't meet the criteria that I'm looking for. It depends on what that criteria is. Now, with this being a limited partnership company, this is going to fall right here. Dividend payout ratio of 75% or less. I am not concerned with that with REITs, BDCs, and limited partnerships like EPD or other companies like these, right? They typically pay out, REITs specifically, BDCs, limited partnerships, they typically pay out more than 75%, usually 80, 90%, sometimes even more than that. A lot of times they might be using cash on hand, for example, to pay out dividends. So I'm not worried about the 75% or less for this one, but it's still got to meet 5 of 8, right? We either just give it a check right off the bat or we just ignore this altogether, but I still like to look at the 5 of 8 overall. All right, now back to Enterprise Product Partners. We're going to look at them at their homepage. Check them out there, www.enterpriseproducts.com. That's www.enterpriseproducts.com. Again, www.enterpriseproducts.com. That is their homepage where I pulled this information from. About us, Enterprise Products LP, that LP means limited partnership, is a publicly traded partnership listed on the New York Stock Exchange. The ticker is EPD, and out of the energy sector. Our origins began with Enterprise Product Company, formed in 1968 by Dan Duncan and 2 partners as a wholesale marketer of natural gas liquids, and that's really what their bread and butter is. They transport natural gas and oil. Today, our integrated energy infrastructure network provides midstream energy services to producers and consumers of natural gas liquids, crude oil, refined products, and petrochemicals. We link producers for some of the largest North American supply basins with domestic consumers and international markets, right? So they are the pipelines that are transmitting the crude oil, natural gas, and petrochemicals. All right, and the reason we are taking a look at them, down 0.69% on the day. Not a big drop, but a drop nonetheless. There was a lot of green in the market today after a big drop yesterday. Not surprising, but this one was down, so it is in my portfolio, so I thought we'd take a look at it. Closed out the day at $33.09. We are talking about Enterprise Product Partners, again, LP Limited Partnership, ticker EPD. They are out of the energy sector. 52-week range as low as $27.37, as high as $34.63. Not quite to a 52-week low. It needs to be $51 and some change and under. So under $51 would be, or under $31, apologies, under $31 and some change would be within 15% of a 52-week low. Market cap of $71.725 billion, a beta of 1.05, so just slightly more volatile than the overall market. Beta, that's what beta stands for. It's the volatility of the market, 1 being the market, so slightly more volatile. You can see that volatility, right? Looks like it shot up in the first part of the day, fell down through midday, climbed up towards the end of the day, and then right at the end of trading dropped back down. So there's that volatility throughout the day. PE price earnings ratio of $12.30 per share. Earnings per share $2.69 per share. Earnings date coming up sometime in this window here between April 28th to May 2nd. for dividend is $2.14 annually. They are a quarterly payer, so divide by 4 here, or we'll see that here in a little bit. Nice starting dividend yield of 6.42%. I think my dividend or my yield on cost on this one is closer to 9%. I bought this one a while back. Ex-dividend date, January 31st. They paid out on February 14th, so you would be in line for the next dividend, but it will be in April there, and usually their ex-dividend date is the month before, so probably sometime in March here we're expecting another ex-dividend date. And remember, you want to buy it the day before or sooner than the ex-dividend date. Don't buy it on the ex-dividend date. That does not lock in that dividend. Ex-dividend date January 31st. We talked about that. 1-year target estimate, $36.44. So they do see some upside as far as price appreciation and a new 52-week high, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance, just one source I go to for information. Jumping over to the right, looking at dividend yield theory, we look at their 5-year dividend yield average, 7.88%. Compare that to the current 6.42%, or over here 6.42%, same number. And since it is lower than their 5-year average, that actually speaks to overvaluation, right? They're inversely correlated. So since it's lower than the 5-year average, that's overvaluation. If this was higher than the 5-year average, that would be undervaluation. So at least right now, according to dividend yield theory, they are potentially overvalued. Payout ratio, as I mentioned, I'm not as concerned with this. It is at 77.32, which is really not bad for a limited partnership or a BDC or a REIT. Again, a lot of these companies pay out 80, 90% or even higher at times for payout ratios, right? They're returning money as a limited partnership back to the shareholder, significant amounts typically. Dropping down, I like to see growing free cash flow though, because typically if a company has growing free cash flow, whether it's a regular company or a limited partnership, they can do some things with those funds. They can pay down debt, they can make acquisitions, reinvest back into the company, buy back shares, pay a dividend, this one does, and grow that dividend over time. So 6.29 December 2021, 6.2 billion in free cash flow there. 2022 looks like the drop down to 6 billion. 2023 further dropped to 4.3 billion, and the trailing 12 months, which includes all of 2024 and part of 2025 now, looks like 3.6 billion. Though their repurchase of shares is up and down. It looks like 214 million in 2021, slightly up in 2022. I don't think that really accounts for the decrease in free cash flow, but you'd have to do the math there. This definitely doesn't, down to 188 million in 2023, and trailing 12 months back up to 252 million. So they are adjusting their repurchase of shares, and again, they had really returned a lot of capital back to the shareholder on this one with such a high dividend yield. All right, we're going to jump over and look at some information from stockanalysis.com. This is another source that I like to look at. I'm not affiliated with stockanalysis.com, just another source I go to. I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. Sometimes information is wrong from sources. Sometimes it's not up to date. It happens. Now, they do have 11 analysts that have looked at this. They call it a consensus buy. Low estimate of $31 would represent a negative 6.32%. So that would be a drop of 6.32%. If it dropped down to the $31 low, they're estimating. Average estimate of $34.45. Pretty close to what we saw with Yahoo Finance on the previous page. Maybe a little lower. Maybe it's closer to their high. But this would represent a 4.11% increase from where it currently sits. High estimate of $40. That would represent a 20.88% increase. All the while, you could collect that 6+% dividend yield. I like to look at the statistics here, look at return on equity and return on invested capital. Jump over here. I like 10% or better for both of these metrics. Return on equity is there at 20.43%, so beats the 10% I'm looking for. But return on invested capital is a little low at 7.28. So it's got to hit both to be able to get the check. So with the 7.28% being below the 10% I'm looking for return on invested capital, not going to make it there. EPS growth forecasted over the next 5 years. I like 5% or better. They're sitting at 3%, so not going to get a check there. Revenue growth forecast at 2.31%. Not part of an initial screener, but I do look at this as part of the deep dive into the financials, so I throw it in here. All right, as I mentioned, I am long Enterprise Product Partners, ticker EPD. I have 301.94744 shares. I am up 27.66%. My cost basis is down at the $25.92 per share. So this one, I did add some recently whenever I reallocated some funds from a sale that I made, or a couple of sales that I made. But it was a little bit lower than where it currently sits. I think it might have been 32 and some change, which is still a little higher, but my cost basis is so low. I don't mind nibbling a little bit. I just would like more of a pullback here. But I do like Enterprise Product Partners. It's been a very good holding of mine. Like I said, up 27.66%. Wouldn't mind it dropping back, by 10, 15% even, 20% even, and then I could add some more and then let it run up again. But not really looking to add right now. Other stocks out there that I'm adding to that I think are presenting more value. But I do love the company. Quarterly payer, as we discussed, payout ratio of 78.01%. So again, over 75%. But for limited partnerships, I'm not looking at that as much. Dividend growth of 4.74%. So decent dividend growth, right? I'd like it a little higher, but not bad. 10 years of growth. Buyback yield is positive at 0.09%. Shareholder yield is positive at 6.44%. Now, they do pay out on the off schedule of most companies, February, May, August, November timeframe, which I do like that. And going back in time here, you can see July 2022, 47 cents and some fractions of a penny. Raised it up January 2023 to 49 cents. Raised, and some of this might be slight. No, they raised it up. I do remember this. July, so they had a pretty nice raise January 2023, then raised it again in 2023 in July from 49 cents to 50 cents. Raised it January 2024 to 51 cents and some fractions of a penny. Again, raised it in the same year, later in 2024, July, again at 52 cents and some fractions of a penny. And then January, most recent raise, 53 cents, some fractions of a penny there, 53 cents. And then I would be willing to bet that they come back in July and raise it again. That's been kind of the marching order, at least the last several years. So I am anticipating that again this year, but we'll see. But they have made their most recent raise was up to 53 cents. All right, let's run it through the screener here. Understand the business, check there, right? They're a limited partnership that deals in the transport of oil, gas, primarily. Growing free cash flow, no. We had some slight down years there. Growing dividend, yes. Dividend payout ratio is over 75%, but again, I'm not as concerned with this. So if you wanted to just put a check in there, that's fine. Check valuation based on dividend yield theory. No, they're potentially overvalued according to dividend yield theory. It is not within 15% of a 52-week low. Return on invested capital, return on equity is both of them are not under 10%. Return on equity is, but return on invested capital was only at 7% and some change. Earnings per share growth was at 3% instead of 5%. So we're only looking at 2 out of 8. It would not make it onto my watch list, but because of the ones that, right, the 15% of a 52-week low, obviously it's up right now. Return on invested capital, return on equity, not as concerned there. Earnings per share growth, not as concerned there. I will probably look at the financials this weekend, but I'm not concerned with this company. I think they're growing nicely. I would like for more of a pullback on this one personally. Let me know what you think of Enterprise Product Partners in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Enterprise Product Partners you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section down below and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Invest journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable with. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.